Does it call for party? Following weeks of rumors about who would take over for fallen exchange FTX US in acquiring Voyager after it filed for bankruptcy this summer, cryptocurrency exchange Binance's autonomous US arm has successfully won a bid to acquire the assets of crypto broker Voyager Digital and effectively bail it out for slightly over $1 billion. Voyager was one of the first businesses to begin failing when the value of cryptocurrencies fell this year. Three Arrows Capital, a struggling Singapore-based crypto hedge fund, received a notice of default from Voyager on June 27 for failing to reap $675 million in loans for Bitcoin and stablecoins. A week later, the broker ceased trading and filed for bankruptcy. A considerable more complex narrative lurks behind the headlines of Sam Bankman-Fried's arrest in connection with the collapse of FTX and Carolyn Ellison, CEO of Alameda Research, lack of experience. One that draws attention to a prolonged conflict between SBF and CZ Binance even before they appeared on Twitter. This is the account of the struggle to obtain the assets of Voyager Digital. Despite being far smaller than some of its rivals such as Coinbase, FTX, or Binance, Voyager was another cryptocurrency platform with a significant US investor user base. Seeing as how Voyager was another platform that thought cryptocurrencies will be the future of banking and investing, many investors, including myself, ended up choosing them because of their executive team. Stephen Ehrlich, their co-founder and CEO, had a wealth of knowledge in this field. He was a market structure broker who previously served as the CEO of E-Trade Professional Trading. But looking back, it is clear that putting your faith in this management team was a big mistake because Three Arrows Capital received a loan from Voyager for $350 million USDC and 15,250 Bitcoin. Unfortunately, this left Voyager in trouble, forcing them to stop accepting withdrawals from users of their platform and file for Chapter 11 bankruptcy soon after. And this happened despite agreeing to a term sheet for a revolving line of credit from, Alameda Research for $200 million and 15,000 Bitcoin. You see, there were connections between them and FTX Sam Bankman-Fried and Alameda Research in particular, even before Voyager's collapse. And Sam Bankman-Fried tried to intervene and emerge as a hero once Voyager filed for bankruptcy. After declaring bankruptcy, Alameda FTX issued a press release in which it basically made a buyout bid for Voyager outside of their Chapter 11 bankruptcy procedure. After this, a representative did comment that they had already received bids that were greater and better than that proposal, and that many of the claims made by Alameda FTX in press releases, interviews with Fox, and Twitter were actually false. As a result, Sam Bankman-Fried's lowball offer was rejected, which opened the door for the Chapter 11 procedure. Thus, bids for Voyager would not just come from FTX Alameda Research, there were other bidders as well. And while the terms of each offer to purchase the assets of Voyager Digital were not made public, we did see headlines, such as how national security considerations impeded Binance's bid to purchase the assets. This did appear to come out of nowhere at the moment, but this is CZ's explanation for why this headline was first published.
First of all, I think the U.S. national security concerns were rumors spread by FTX to try to push us out of the bid.
However, it is clear that all of that excitement was for show, as Voyager announced on September 26 that FTX had agreed to buy its assets after the auction was successfully concluded. On November 11, however, just a few weeks later, Sam Bankman-Fried resigned as CEO of FTX, and his cryptocurrency exchange declared bankruptcy, and thus gave Voyager customers a choice between two feelings. First and foremost, they were disappointed that the arrangement didn't work out since they expected to receive their money back, and now the process would need to continue. Some people are also grateful though, as they can only imagine what would have happened to Voyager's customers if this sale had fallen through. Voyager tweeted that the customer vote would be cancelled in view of the latest developments and information involving FTX US. Additionally, the intended deal to FTX would not proceed. They also mentioned that they started active discussions with a number of alternative bidders, one of which was Binance US, which was obviously quite convenient for Binance given that FTX was their other major rival in the bid for Voyager and had since declared bankruptcy.
The US will make another bid for Voyager now, given FTX is no longer able to follow through on their commitment.
So it seemed for the second time around that Binance had a path to victory, and what do you know? The bid to buy the assets of Voyager has officially been accepted by Binance US. It is vital to note that the real bid is for since, as you may recall, the FTX bid was valued at roughly $1.4 billion. Binance's bid, on the other hand, is slightly lower at about $1 billion. Therefore, since Binance US's proposal is smaller than FTX at just $1 billion, you can definitely anticipate receiving less back. FTX's bid of $1.4 billion was going to lead to users receiving roughly 70% back. The specifics of that have not yet been disclosed, but we do know that Voyager will now apply to the court for permission to engage into this asset acquisition agreement between Voyager Digital and Binance US on January 5, 2023, right after the holidays. Now, the following step will be decided by a vote of the creditors if that does go through. Voting yes, however, might not be as simple as it was for some with the FTX agreement, because we have seen what might have happened if that deal had been approved. Particularly considering that there is a lot of fuss surrounding Binance at the moment, because CZ of Binance is quick to dismiss this as a hoax. Others are beginning to wonder whether there is some basis for these worries.
How are people and why should people trust that their money is safe at this point?
People can withdraw 100% of the assets they have on Binance. We will not have an issue in any given day. So crypto businesses have to hold user assets one-to-one, and that's what we do. It's very simple. So people who are hurt by FTX are not worried about everybody else, and they were defending FTX before, but that's why they have money on FTX. So, but just because they're bitten by one snake doesn't mean that every other animal is the same.
Please share your opinions with me after listening to CZ address these claims. Do we have another FTX case on our hands? Or can we trust CZ when he says Voyager customers? During a hearing on Tuesday afternoon, U.S. District Judge Michael Wiles of the Bankruptcy Court for the Southern District of New York approved disclosure statements outlining various aspects of the proposal plan to sell Voyager assets. However, he requested that the deal's lawyers revise the proposed order documents before he approved them. The agreement must also receive consent from the majority of Voyager's creditors in order to be approved. It will be the subject of another confirmation hearing in March. After Sam Bankman-Fried's exchange crashed in November, Voyager decided to resume the bidding process after first agreeing to sell itself to FTX. The winning bid was made in December by Binance US. Did you find this video helpful and informative? Please let us know in the comment section below. Please support us by showing your appreciation for this video and give us a big thumbs up. And subscribe to our channel. If you want to be notified when we release a new video, click on the notification bell to be up to date on everything related to crypto and finance. That is it for today's video. This has been Diversified Streams. Thanks for tuning in, and see you in our next video.